All right, I think we are live. Welcome, everyone. I believe this is episode 28. So this is Peter Harris Live, Tuesday with Peter, and I thank you so much for joining us. And again, the goal here is to help you get your first deal done to demystify commercial real estate and get you in the business. All right, so give me a second here. I need to put my chat up so I can see who's out there. All right, so first thing I want you to do is go ahead and where's my chat? There you go. There's my chat. All right, so go ahead and share with me where you're calling from. Let's get started. Here I see Deneen. All right, I see Lauren. I see Lydia. All right, Jerome from Kentucky, Matthew from Roanoke, Josh from Idaho, Jimmy from Clarksville. All right, we're working on a deal in Clarksville right now. Chad from Menifee. All right, I used to own two properties out there. Chad, Sam. All right, I see Dee from Tallahassee, Kimberly from Detroit, Alan from Houston. We are well represented. This is awesome. Felton, California. All right. Let's see, Theodore from Orlando, Joey from Tampa. All right, Olivia Mansour from Portland, Oregon, Dan from New York City. Congratulations on your Knicks. All right. Congratulations on that championship. All right, we're going to get started right here, right? And I'm going to get started by holding up this. You guys see this? This is seasoning. This is my favorite seasoning, right? And it's from a restaurant back in the South. It's called Hattie B's. And it's one of my favorite seasonings. If y'all want to make the best chicken in the world, the best baked chicken and vegetables in the world, you need to use this. So why am I starting off this webinar with seasoning? Well, here's the reason why, right? First of all, I'm glad you're here today. But before I get started, I want to address what I call the elephant in the room, right? I talk to beginners all the time, right? And I know I kind of have a good idea exactly what you're thinking, right? You're looking at your age. You're looking at how long you've been in on the W-2 hamster wheel. And this is what today's topic is about. And you're probably telling yourself, Peter, I'm in my 40s, my 50s, my 60s, even my 70s, and it's too late for me to start building wealth, right? I missed the boat. And let me just say this. Did you know that Ray Kroc, right, didn't start taking over McDonald's and until what? Until he was what, 52 years old, right? Built an empire. Colonel Sanders, right? Kentucky Fried Chicken didn't start KFC until he was 62 years old. And get a load of this. Warren Buffett, right? One of the richest guy in history in the world, right? He built 99% of his wealth after he turned 60. Incredible. After he turned 60, 99%. So we all have hope. So here's my take for tonight. Age is not a ceiling. So age is a seasoning. Okay, it's what makes you better, right? It means that you have more life experience, more wisdom, you making better decisions, and you have more resilience than a 20-year-old just starting out, right? So don't buy into the lie that it's too late to start something great. If you are still breathing, your best years are still ahead of you. One of my first pastors, his famous talk was, your best is yet to come. And I truly believe that, even for myself, but mostly for you. So later on this Zoom call, I'm going to introduce to you one of our students, Dave. Dave was driving a fuel truck, right? He was working 60, 70 hours a week on rotating shifts. So he didn't even get to see his family, right? And but guess what? Dave didn't even start his commercial journey until he was 55 years old. Okay. And then he went over the next few years, developed a $6.5 million real estate portfolio. He's going to share his entire story. Okay. So if you showed up today thinking you are too old or too far behind, I want you to drop that excuse right now. So today is about taking the seasoning, right, you already have, and applying it to a roadmap that actually works. I'm going to share that roadmap tonight. All right, so you guys ready to get started? All right, I like what John sees. He says Moses was 80 when the Israelites left Egypt. There you go. All right, never too late. Never too late. All right, I'm going to put this seasoning over to the side, have my wife make some chicken tonight. All right, so we're going to get started. All right, let me bring up my presentation. Give me a second, you all. All right. All right, okay. All right, here we go. And from the current slide, there you go. All right, so since we are live, I'm going to check with Michael. Michael, how's my screen looking?
Looks good, sir.
All right, great. Okay, so let's get started. Okay, so episode number 28. I'm so excited you all have so much to share today. All right, so I'm going to start. This is a topic today, W-2 paycheck versus passive income. I'm going to share with you the 7 steps to financial freedom through commercial real estate. Okay, so we have education, and then we have some practical steps. I'm going to bring Dave on and show you how to get it done. And in fact, here's Dave here, right? It's my special guest. Again, Dave was a fuel truck driver, built a $6.5 million portfolio, 45 units across 7 properties. He's going to share with you how he leveraged. Okay. Dave didn't have $200,000 in the bank. Okay. He had none of that. So he's going to share with you how he leveraged his current finances into a $6.5 million portfolio while working 70 hours a week and not seeing his family. Okay. During night shift. My promise to you today is by the end of this call, you will understand exactly why your W-2 job is keeping you on a financial hamster wheel. And more importantly, you will have the exact roadmap to step off of it. And lastly, you will walk away knowing how to build real security and financial freedom through commercial real estate. That's my promise. All right, you guys game for that? Let me put it in the chat. You guys game for that tonight? Let me hear from you in the chat. All right. Thanks, Kevin. All right. Good. Thanks, Gail. Thanks, Brenda. All right. So I want to address this. All right. So I'm going to address any excuse you may have, right? You don't need millions to start. And if you don't have the time, that is exactly why you need passive income. Okay. So the system you are in right now, today, right? Today in 2026 is designed to keep you trading your time for money forever. Tonight, we're going to break that cycle. Okay, we're going to break that cycle tonight. And let me say this. Here's why I'm so bold as to make such a claim. Right? Here's a couple of things I want to share with you. We've been mentoring for over 20 years inside of our Done With You mentoring program. And we help students complete over $100 million in deals. And I can proudly say myself and our group of coaches, we are the #1 commercial real estate coaching business in the US. I can gladly say that, right? Okay, and you're going to see that tonight. All right, so I'm going to start off with a couple polls, like I always do. And again, these polls help me determine the direction of the night, all right? So the more you participate, the better. All right, so I'm going to bring up these polls right here. All right, here we go, polls. Here is the first one. Let me launch this here. All right, here's the first one. How many hours a week are you dedicating to your W-2 job? I just want to see. Put your answers in there. Is it a strict 40 hours? Are you working 45 to 55, 60 plus? Or if you are a business owner, you work 24/7. So tell me, let's see what the answer is. All right, so we have, it's pretty even across a strict 40 hours versus 45 to 55. But also, I'm a business owner, so I work 24/7. Oh boy, those are the top 3. Wow, okay. So business owners are up there. You're neck and neck with 45 to 55 hours, and then the other person's working 40 hours. Okay, great. And only 13% of you are working 60 hours or more. All right, okay, great. Good to know. All right, thank you for that. I want to run the second poll here. Here's the second poll. Right, this will help me tonight knowing what to teach. All right, fast forward. 12 months from today, what is your primary real estate goal? Give me your answer. Is it just to close your first deal, period? right? Double your current portfolio size, or transition completely out of your job, or supplement your retirement savings. Put your answers there. All right, so far we have transition completely out of your job. That is awesome. You're going to learn so much tonight about that. Okay. And then number 2 is just close my first deal, period. Okay. And then trailing by supplement my retirement savings. And lastly, double my current portfolio size. Okay. So number 1 is to transition completely out of your day job. Awesome. You are in the right place tonight. Okay, right place. Okay, I'm going to end the poll here. Thank you for that. Okay, this tells me a lot of where to go tonight with tonight's material. All right, so I'm going to start off with this right here. Most people are one paycheck from financial crisis, right? The average W-2 employee has less than 3 months of savings. Incredible, right? Your income is tied directly to your time, and your time is finite. That means there's an end. Your time is not unlimited. It is limited. So today, my goal is to open up your eyes through these 7 steps, right? And help you see and break this cycle. All right. Okay. All right. So step number 1 is the W-2 trap. You work an hour, you get paid for an hour, right? And then what happens after that? So a W paycheck is strictly linear, right? You work, you get paid. You work, get paid, you get paid. You stop working and the income stops, right? You are the engine and the engine burns out. So this is the hamster wheel I was talking about today, right? Here's my first question for you. If you stop working today, how many months of savings do you have? Just give me a rough number. Doesn't have to be precise. So put it in the chat. Okay. Let me go to the chat here. All right. Okay. So put in the chat here. I see a lot of 1s. I see a lot of 0s, 3s, 3 to 6 months, 12 months. I'll be okay. Good. Good. 12 months. All right. I see a lot of 3s, 2s. All right, good. 1 to 3, 3 to months, 6 to 12 months. Awesome. I'm good for years. Awesome. Okay. I'll be okay. Good. Very good. Thank you for sharing this. Very useful, right? Very eye-opening. Very eye-opening. Let's go to step 2. Step 2 is this. It's the mindset shift. Okay. Wealthy people buy back their time. Okay. The middle class sell it. So the middle class is focused on time and work and money. That's a vicious cycle. Versus the wealthy, where it's assets, income, and freedom. Okay. Don't forget, if you get anything out of tonight, you have to realize that income follows assets. Okay. I'll repeat that again. Income follows assets. Okay. And these assets and income, they work even while you're asleep. You're going to learn that tonight. Okay. And that's the benefit of it. Again, tonight, my goal is to break this cycle. Okay. Break this cycle. Let me share this with you. If you have 10 apartment units, you have 10 income streams from 10 tenants, right? You lose 1 tenant, you keep 9 tenants paying rent. But if you have 1 W-2 job, that means you have 1 point of failure, okay? So a 10-unit apartment building means 10 separate streams of income covering the mortgage, the insurance, the taxes, even paying you, okay? And if 1 tenant leaves, 9 tenants remain, and you're still able to pay the insurance, the taxes, the mortgage. To me, this is true financial security. So my goal tonight is to show you how commercial real estate can be this for you in your life. Chat question. If your company downsized you and you had a choice, okay? And you had a choice, would you A, find another job, B, do something totally different, or C, go into real estate full-time investing if you could? Hey, give me your answers here. All right, I have overwhelming C's. That is fantastic. Look at that. Overwhelming C's. So you all want to do this full-time. You're in the right spot. My guest tonight, Dave, he's doing just that. Dave was once in your shoes, right? Watching us on YouTube, and now Dave does this full-time. So Dave's going to share with you the whole process. Okay, thanks for sharing in the chat. C, overwhelming, overwhelming. Okay, awesome. Okay, now here's step 3. Step three is the W-2 employees are the highest tax group in America. Did you know that? Did you know that? So the average worker has to work nearly 4 months of every year just to pay taxes. So in 2026, if you work a full-time job, you are working until April 16th to pay the government. And then that's when you break even and the rest is yours. That is a shame. That is a shame. So that April 16th is called Tax Freedom Day, and it marks the exact day in which the average American has finally earned enough to pay taxes for the year. Okay. Everything before that goes to the government. Incredible. We got to stop that tonight, and we are. Okay. Here's a chat question. Put the answer in the chat here. Okay. True or false? The harder you work and the more overtime you put in at your W-2 job, the higher the percentage the government takes from those extra earnings. So put that, is that true or false? Is that true or false? Let me see the chat. Okay, I have a bunch of trues. I have one false. I have an absolutely true. The answer is true. The answer is true. Because what happens when you work overtime, the government will put you in a higher tax bracket. And guess what? They'll take even more money. When I had my W-2 job as an engineer, every year we would get our bonuses if we meet our sales quota. And I got sizable bonuses, but I was shocked when over 50% of my bonus check was taken away. And I'm thinking, why would it? Usually it's 30%, 28%, it was 50%. That's because that bonus bumped me up into a higher tax bracket. So what's the use of bonuses, right? Oh boy. Okay. All right. Okay. That was step three. Here's step four. Okay. Step four is really important because taxes are one of your biggest expenses. If you're not an investor, and even if you're an investor, you have to know how to handle it carefully. So real estate investors play a completely different set of tax rules. Okay. So the tax code, ladies and gentlemen, is written to reward people who provide housing. Okay. So when you own an apartment building, you are providing housing and the government loves you for that. Okay. And in that instance, you can write off. Guess what? You can write off the loan interest on the loan, the property taxes, the maintenance, the management. You can keep more of what you earn. Okay. So it's actually pretty amazing the tax benefits you get from owning real estate. Even better for commercial real estate. Okay. Here's a true or false. Okay. Your apartment building goes up in value by $500,000. You do a cash out refinance and pull out $300,000 in cold hard cash to buy your next property. Here's a question, true or false? You pay exactly $0 in taxes on that $300,000. This is not a trick question. So give me the answer. Is this true or false? You pay zero taxes, or are you going to pay income tax on that $300,000? Tell me if that's true or false. Put it in the chat. All right. Okay. I see a lot of trues. Okay. And the answer is true. This is something you have to understand. Okay. Because this is exactly how the wealthy, how we extract tax-free cash to multiply our portfolio. We take the cash out to buy another property, and the money we take out from the IRS is considered a loan. It's not income. Okay, so you can do a cash out refi of $500,000 and it doesn't impact your taxes. Okay, as money for you to use. Okay, Tamisha is saying sounds good, too good to be true. But Tamisha, that is true. Welcome to the world of real estate, the wonderful world of real estate. Okay, all right. And Clyde is saying depends on what you spend it on. Clyde, you better buy a property. Don't buy a boat. Okay. Don't buy jewelry. Don't buy a Tesla. You need to buy, remember the saying, income follows assets. So when you do your cash out refi, you need to buy assets so the income will follow. That's what we're talking about today. We're talking about financial freedom. A Tesla is not going to get you towards financial freedom. All right. Okay. Here's a chat question. I just want to know this answer. Okay. Has your accountant ever talked to you about using real estate to reduce your tax bill? Yes or no? Put it in the chat. Give me a yes or no. Okay. All right. Interesting answers. And I am blown away. I was hoping I would get a bunch of yeses. I am about 50% of your answers are no. And that's very sad. Okay. Very sad. Okay. If you're if your accountant, let's say you don't have an accountant, let's say you have someone who prepares your taxes, and I'm not talking about reducing your tax bill buying real estate, you need a new advisor. All right. So what I want to do is we cannot give and we don't give tax advice, right? But if you want to get introduced to maybe start thinking about buying real estate to reduce your taxes, I'm going to have my person, Stephanie. Stephanie, can you put in the chat box here how to contact us to actually talk about buying real estate to reduce your tax bill? Okay, look in the chat box, and then this is an opportunity for you to have just a conversation with us. Okay, so the chat will appear in the chat. Click on it, and you can talk to someone. All right. Okay. So next, what I want to do is I want to talk about something that's very exciting. Okay. This is called defining your goal. Okay, this is very important because this is going to help you tonight decide in which direction you're going to go. All right, so financial freedom is not $1 million, right? It's a simple math equation. So financial freedom is the exact moment your passive income, okay, exceeds your monthly living expenses. So if your life costs you $5,000 a month, and your properties generate $5,001 per month, you are financially free. Okay, you no longer have to work. That's called your financial freedom number. Okay, so when your passive income is greater than your monthly expenses, you are free. That's the goal. Our guest Dave is going to share with you how he met his goal with that. I'm going to share with you what my financial freedom number was many years ago when I was an engineer and I was a single parent. Here's mine. Mine was $4,200 a month. Okay, so I needed to make $4,200 a month, and then I could be financially free. I could leave my job. While I had my job, I bought this 7-unit right here. This is the actual 7-unit. I still have a picture of it because it's near and dear to my heart. It's one of my first properties that I bought. It's a 7-unit, and the cash flow from it made up about 40% of my freedom number. All right, so just this one property. And then, of course, I bought other properties to meet the $4,200. So you don't need to have one property to meet your freedom number. Okay, so this one property took up a big chunk of it. This property paid for my sons and I insurance. It paid for my property taxes on my home. It paid for part of my mortgage. All right, so it was a part of it. Okay, I share this because I want you to just get started. Buy one property and take a good chunk out of your freedom number, right? Now, what I want to do next is help you calculate what that freedom number is, okay? Look at this formula right here. Okay, here's how you calculate your freedom number. You have your housing costs, okay, your rent or your mortgage, plus a buffer for eating and things like that, and that equals your freedom number. So let's say it's 4,300 plus 700. Let's say your freedom number is $5,000. Okay, so that's what you need to make in passive income to be free. Now, look at the bottom part of the page. Your $5,000 divided by $175. Now, when you buy an apartment building, I'm assuming, if you buy something I'm just averaging it out across the US. Across the US, a multifamily will cash flow $175 per month. So if you divide your $5,000 by 175, you need 29 units to generate $5,000 a month. Okay, does that make sense? Okay, does that make sense? Okay, here's a question for you. I want you to put this in the chat. What is your monthly freedom number? Okay, give me that number. Okay, what is it? Is it 5,000? Is it 10,000? Tell me what that number is. Okay, Dwight's at 10,000. Cher's at 6,000. Gail's at 7,000. Okay, so Gail, if you're at 7,000, right? Let me get my calculator. If you're at $7,000, Gail, you need 40 units. All right. All right. So I have someone who's at 6,000, 8,000, right? 10,000, 12,000. Okay, great. It's very important that you know what that number is. The next step is we need to go get it. Okay, we need to go get it. And we're going to show you how to do that. Okay. All right. Okay. Thanks for sharing, everyone there. All right. Leanne is 5,000. Udeme Joshua is 6,000. Derek is 16,000. Patrick is 6,000. Okay, great. Thanks for sharing that. Now that you know that number, tonight we're going to show you how to go get it. All right. Let me just say this. This is step 6. You don't need 500 units, right? We just talked about that. You just need one good deal. One solid multifamily or commercial property can replace a significant chunk of your W-2 income. Remember my 7-unit property, it took up 40% of my freedom number? Okay. So it proves the concept and builds your confidence and starts the snowball effect. Get the first deal done. Okay. Stop focusing on the $10,000, $12,000 a month. Focus on getting the first deal done. Okay. Focus on the first step. I have a question for you. Here's the question. Okay. If you're not sitting on a lot of cash, which is best to get your first deal done? Is it A, using your HELOC, B, seller financing, C, using private money, D, using retirement funds, or E, commercial wholesaling? Put your answer there. Which is best to get your first deal done? All right, so give me your answer. Teresa, Michael, Janice, all right, Tammy, Carol. All right, great, great. Okay, John, Sarah, William, thank you for the answer. Okay, here's the answer. Okay, here's the answer. The answer is all of the above. Okay, any of the above. Okay, so you can use any of these right here to get your first done. So if you have a HELOC, if you want to learn how to do seller finance, you want to learn how to use private money or use retirement funds or do commercial wholesaling, all 5 of these things can help you get your first deal done. And guess what? This is what we teach in our mentoring program. All right. So this is all available for you. And by the end of this call, I'm going to share with you how to get your hands on all of this here. Okay. All right. Okay. Step number 7. This is the last step, and it's all about taking action. Knowledge without action is just entertainment, right? So I'm going to give you homework today. First of all, I don't want you to quit your job. Okay, don't quit. Instead, what I want you to do is block off a specific number of hours this week to analyze your first deal and connect with a mentor. Okay, and to connect with a mentor. So I'm going to have Stephanie put up how to connect with a mentor in the chat box. Put it on your calendar. All right. So that one committed hour is how you step off the hamster wheel. You have to get started. Okay. You have to get started. Now, here's my chat question here. This is for you. Share with me what specific day and time this week will you block off to work on your first deal? Okay. Make it public. Make it public. Let me put it in the chat. Tell me, is it going to be Monday? It's going to be this Friday. Okay. Tina says tomorrow at 11. Okay. I have Wednesday, Thursday. Okay. Love this commitment. Okay. D, love the Gregory, love the commitment. Victoria, Donald, Thomas, Beverly, Clyde. All right. Great. Donnell gives me specific. He said Thursday between 6 and 11 p.m. Donnell, that's exactly what I did because I worked full time. And that's when I had time from 6 to 11 p.m. That's exactly what I did. Pam, every day at 4, exactly. Ray, Friday. Okay, Gail, tomorrow at 1. Thank you for that. Thank you for that. All right. And all right, Juanita, Thursday. Okay, good, good. All right. Because here's a conclusion. After I went through these 7 steps, here's what I want you to see. Okay. So watch this. The version of you that is financially free is built one deal at a time. Okay, one deal at a time. You got to get that first deal. My guest, Dave, focused on getting that one deal. He ended up buying 7 deals to become financially free, but that first deal was the most important. Okay, and he will share that with you. All right. So without further ado, what I want to do is bring up my guest, Dave. Right. Again, Dave was a fuel truck driver. He built a $6.5 million portfolio, 45 units across 7 properties. And get a load of this. Dave built his portfolio in Northern California, where people say there aren't any good deals. It's all too expensive. Not to Dave. Not to Dave. All right. And Dave wasn't sitting on $200,000 in cash. He was just sitting on a HELOC, ladies and gentlemen. He was able to do this. So Dave's going to share his story, right? So Dave, let me know when you're on so we can start here. All right, and I'll show you part of Dave's properties. Look at this. These are just small multi-families, ladies and gentlemen. So Dave didn't buy 500 units to escape the rat race, okay, to stop the hamster wheel. Okay. All right, let me
We're
know when
on.
you're on, Dave.
You hear me? I think we're on.
I can hear you, Dave. Hey, thanks for joining us.
Yep. Good to see you, Peter.
All right, awesome, awesome. All right, Dave, so you built 7 properties, the portfolio, 45 units. You used some leveraging, you escaped the late night shift, and
Mm-hmm.
and you were driving a fuel truck while doing all this, right?
Mm-hmm.
You were
Correct.
working 12-hour rotating night shifts, 70 hours a week. So, Dave, can you describe what that did to your family life, right? Coming home when they were asleep, and when you woke up, they were gone. So, how did that make you feel?
Not good. Yeah, it obviously took time away from my family. Also missing a lot of family and friends gatherings, especially during the holidays. It was brutal. Just not being able to be there when needed. So yeah, not good.
I imagine during the holidays, you're driving your truck and everyone's there, right?
Mm-hmm.
Yeah, yeah.
Yeah.
So Dave, a lot of people think that if they just work harder at your W-2, they'll get ahead, right? But you were working 70 hours per week and realized it was a trap. Okay. So what was the exact breaking point moment when you realized you had to find another way? So what clicked there?
Yeah. Yeah, my income just wasn't keeping up with inflation. I mean, you may
Mhm.
get 3 to 5%, for example, but expenses were going up and I wasn't keeping pace with that. As a matter of fact, the taxes were going up, so it was a domino
Mm.
effect, getting less, working more, like you covered a little bit earlier, in most cases. So plus more taxes again, taken out. And that was the moment I realized I need to find another way.
Yeah,
I had to do something. Yeah.
yeah, yeah. And then that's when you called us.
Correct.
All right.
Correct.
Okay. All right. So Dave, you made this pivot into commercial real estate at age 55, right? You made this
Hmm.
pivot. So many people in the audience are 40s, 50s, 60s, sometimes 70s, and they believe it's too late for them, right? It's too late for me, Dave. So what would you say to that person watching right now and that they haven't missed the window? What would you say to that person?
Yeah, it's completely false. And you brought up some examples like, KFC, same thing, started way late, became successful. So definitely not too late. Find a mentor to help you mitigate a lot of the mistakes starting out and be coachable and learn. Hmm.
Yep. And so I have a question in the chat. Adisa is asking, Dave, how long did it take you to build your portfolio?
Yeah, it all depends. For me, it took probably 4 or 5 years. But I hustled. I was laser focused. A lot of the stuff that the coaches asked me to do, I did above and beyond just to, you know, escalate things. So that's where I was at.
Okay.
Yeah.
All right.
Hmm.
So commercial real estate is not a instantaneous wealth builder. It takes time, right?
It takes time. Yeah.
Hmm.
Yeah. It's
Hmm.
definitely a marathon. It's not a sprint.
Yeah. And Dave, you built this portfolio while you were working 70 hours a week, right?
Correct.
Hmm. And I'm
Hmm.
sure I'm waiting for the chat question is going to be, how did you manage all of this while driving a truck at night and owning all these properties? So talk to us about how you managed all that, Dave, the properties.
Yeah. Well, obviously you build a team because there was no way with that schedule that I was going to do it, and being 2 hours away, one way to get to the area I was to invest in, there was no way I could do it. So, had to put a team together to do that.
That's great. Hey, Shimon has a really good question. She said, how do I start? So Dave, let me ask you this. You rearrange your shift, right? So you can work at night and work during the day on your real estate portfolio. So what did your day entail? What can you share with them what to do during the day to be successful like you? What did you do?
Yeah. Well, what I did is because I decided to flip my schedule that way, I was able to contact with real estate people, um, PMs, brokers, so I could start building relationships, learning about the area, and I could do that during the day. So there was some give and take there, gave up my nights so I can start scaling and get a game plan together during the day.
That's great. So Dave, give them some details on what did you do? So you woke up, did you make phone calls? Did you talk with us? What did you do during the day to be successful, to get your first
Mm,
deal? What did you have to do?
yeah. Yeah. Again, just like what you said, just made phone calls, gathered information about the area that once we decided where we were going to invest in and just build relationships, and then took that information, right? And started entering that data, learning about the market, calling experts, right? To give me that data so I can start learning how to analyze, which we teach, and then go from there. Is it a good deal or a bad deal? Right. And then
Yeah.
move forward. And as I was guided step by step by you guys, right? The mentoring part, I was able to get to that first deal. So,
Okay. So
yeah.
Dave, Carol is asking, who did you put on your team? So describe your team. Who was on it?
hmm Well, I can tell you guys that your property managers is going to be the quarterback of your portfolio, so to
Mhm.
speak, right?
Mhm. Yeah.
Okay. They're the ones you're gonna want to vet. We teach that. Okay. And then you're gonna keep in touch with them. You're gonna build rapport with them. They're gonna be the ones that are gonna tell you what is going on with that property. You'll have monthly meetings with them, have a game plan, how to increase rents, those things. Use brokers for information and potentially get deals, right? I built relationships with insurance brokers, right? To create options of what different insurance structure that I wanted to use, right? Because it changes. It's a very
Mhm.
active market right now.
Yeah.
Let's see what else. Lenders.
Yeah, that's good, Dave.
Yeah.
I'm going to
hmm
move on to this here. So
Yep.
Elijah is asking, where did the seed money come from? Right. So another person, I think it was Alan, was asking, how did you finance? Dave, Larry's asking, how did you finance your deal? So Dave, as I mentioned before, you were not sitting on hundreds of thousands of dollars in cash, right? So
hmm
explain to the audience here, how did you take down your first deal? Deal number one.
Yep. Great question. Great question, guys. So what I did is same thing when we talk about who to call. So I started calling lenders, developed relationships that way. And then they started asking me, what is your situation? I told them, you know, I don't have anything. They said, do you have equity? I go, yes. What can I do there? And they said, how about a refi? And then they told me about how I could leverage that and use most of their money, which is a phenomenal concept, right? You use
Mhm.
25, they're going to fund 75. I mean, that's a good deal to me, right? And then use that to leverage properties, and that's what we started doing.
Yep.
So that's what I
Yep.
did.
So everyone out there, Dave funded his first deal with his own HELOC. That's how he got started, right? So you don't need $200,000 sitting in your account
Yeah.
and to do this business. So that's how you got started. And then, of course, over 4 or 5 years, this is the result, right? And
hmm
ladies and gentlemen, let me say this: after 4 or 5 years of Dave being very successful, we asked Dave to be a coach of ours because he did this so phenomenally. So as of now, Dave has been a coach for us for quite a while. So later on, I'll give you an opportunity how you can be coached by Dave as well, right? So he's so awesome. So Dave, once you got your first few properties under your belt, you didn't stop, right? So how did you purchase the other properties? So walk us through that because we're looking at I'll show the other properties, the pictures of other properties. So we're talking 7 properties, right? You didn't have to go to investors. This was all done by you smartly
Mhm.
leveraging other properties. So walk us through how you were able to purchase some of these properties, the other properties.
Yeah. So after let's see, properties, I think one and two, we were able to get two within 3 weeks of each other because we did, certain type of marketing that we offer. And we were able to close two ways. So number three, I was pretty much, in a point where, well, how can I get more capital? I want to leverage. I want to scale. I want to scale, right? I
Yep.
got the bug, right? I learned how to go from beginning, going through the process and closing and going, man, this is awesome, right? So I go back to the lenders and they say, have you ever thought of a HELOC? And I go, no, do tell, right? So they told me and they said, yeah, I think we can pull a little more and you can start leveraging. I said, fantastic. Now, of course, the numbers got to work. But that's how I was able to leverage. We did a HELOC, right? Very more simplistic than a refi, but we got to that point where we were able to scale for properties number 3.
Yeah. So everyone listen up. What Dave did was Dave bought a property with his HELOC, and he was able to raise the rents, force appreciation, have it seasoned for a while. Then he pulled money out and he bought the next property, right? And he did
Hmm.
this for 5 or 6 years to free himself up from his job, right? So that's basically what he did. Dave, a real quick question. Victoria is asking, how long did it take you to close on your first deal?
Probably pretty close to a year, and that was probably my doing because I did have a limited schedule, so I started out a little bit slow, but once I really got going, once I got it figured out, that few little pockets of free time that I did have, because I could message the coaches on my lunch break at 2 a.m., right? And then wake up the next day and say, okay, what is my next step? What is my next step? And I would get that. And then that's when I would use that daytime if I needed to call anybody, right? Brokers, real estate, PMs, or whatever. I would do that before I get ready for my shift at night. And then if I had any more questions, right, because of what we offer, where we can have access to messages 24/7,
Yep.
right, I would do
Yep.
that. So that's the beauty of this system, my opinion, my experience was I could do that on my lunch break at 2 a.m. I'd get on there and
There you
reach out.
go. There you
Yep.
go. Yeah, thank you. Everyone on the chat, these are great questions. So keep asking the questions. So I'm trying to go through the questions here so I can make sure you're heard and get your questions done. And all right, so great questions here. All right, so keep them flowing. Okay, keep the questions flowing. All right.
Hmm.
So Dave, you when you got started, did you think it was a great time? Right? Because you're a huge believer in being a contrarian investor. So some people here have no idea what contrarian means. So what is it to you? What is a contrarian investor mean, and how did it benefit you?
Yeah. Admittedly, when you talk about was it a good time, I I did not. I did not think that. So that was kind of my
Mm,
little reservation. But that was because I was listening to the news, right? Not educating myself. Okay. So then, I would talk. I remember one experience. I remember I went to a couple meetups at the beginning and I talked to the big investor guy in the room, right? So he's there. I'm going to go talk to him. You know what? If he's done it, let me see if I can get some secret sauce, right? So I talked to him and I started telling him, but what about this? I sounded like an
mm,
excuse machine, right? And he says,
yep.
he just looked at me straight in the eye and he says, and I told him, well, what about, starting, this and that. And he says, you got to get rid of the excuses. And he said, the best time to start is now, period. He says,
Yep.
I don't care what the market says. If a deal pencils, where you move forward with it. And he says you can learn that. And he told me, be the 5 to 10 percenters and be persistent.
Yep.
and tune out the noise, you know, be aware of what's going on, but tune out the noise because that was a big deal for me. I remember driving home, listening to what that investor said. And he, of course, pointed out some times where, you know, the world was crashing and he was getting deals. And I was like,
Yep.
what? You
Yep.
know?
Yep. Exactly. Hey, Dave, Nicole is asking, how long did you continue to work your job before you quit? So how long did this
Hmm.
whole thing take?
Good question. Good question. Probably about 4.5 years
Okay.
or so.
Okay.
Mm-hmm.
To me, that's how long it took myself as well. So
Mm-hmm.
Nicole, it was worth every single year because if we didn't leave our jobs, we wouldn't be on this Zoom call talking to you all. So
Yeah.
so it took 4 years of dedication, and I could say that during those 4 years, I probably spoke to Dave once a week on the coaching calls, right? Once a week, gave me constant updates, making offers. And then voila, right? One got under contract and he
Mm-hmm.
closed on it, right? Hmm.
Yep.
Okay. And okay, let's see here, Dave. Next question is, let me go. Well, let me go to, there's another question here. Alfonso is asking, I want to make sure I clear this out, asking what is a
Mm-hmm.
HELOC? So HELOC, Alfonso, is when you use the equity in your home to get a loan to use to buy stuff, right? In this case, Dave's stuff was to buy more real estate. Okay, so if you have
Mm-hmm.
equity in a home, right, your personal home, even investment property, we can use that equity to buy more property. And that's what Dave did because Dave was not sitting on a whole bunch of money. He just had equity and a driving desire to and a powerful why to escape his dilemma, which was, as driving fuel trucks and very dangerous and not seeing his family. So Dave had a very, very powerful why, right?
Mm-hmm.
Okay. All right. So keep the questions coming. Very good questions here. Okay. Let's see. Darlene is asking Dave, are all of your units under the same property management company?
Yes, mine are because I got a phenomenal PM. So
Yes.
she knows her
Yes.
stuff. Peter knows who it is. And I'm telling you,
Yes. Yes.
that's like I said, it's quarterback of your portfolio. So make
Yep.
sure we'll teach that how to
Yep.
vet a good PM to get on your team. Hmm.
Yep. Darlene, I'm not sure if you're a football fan, but in pro football, it's all about the quarterback. You have a good quarterback, you're going to win. You have a bad quarterback, you're going to lose. Dave
Hmm.
had the best quarterback that I've known in quite some time. She was so on top of it. She was amazing. And she was critical and key to Dave's success. Okay. I
Yep.
was amazed how on top of everything she was. So the key is if you're in Dave's position, is that we get a really, really good proper manager. Okay. And we can
Yep.
show you how to find them, how to interview
Hmm.
them and select them. Okay. All
Yep.
right. Okay. All right. Dave, looking back at the guy, right? You driving a truck at 2 a.m. in the morning, you're exhausted, you missed your family. How does it feel today, right? To know your home, your personal home is paid off, right? And you have built up a $6.5 million portfolio. How does that make you feel?
Feels awesome, Peter. That's not even a trick question. It feels awesome. I mean, it was worth the temporary 4 to 6 years of sacrifice. And remember, it's a marathon, not a sprint. And remember, practice delayed gratification, guys. That's super important, right?
Yep,
Be
yep,
patient, and real estate will get you there. We'll help you there. Hmm.
yep, yep. Good, Dave. Everyone, when we asked Dave to be a coach, he says, "Yeah, but I left my job and I'm going to Italy for how long, Dave?"
It was about 12 days.
Yeah, 11, 12 days. He just took
Yeah.
off. So left his job. So that's the beauty of being able to take off that amount of time and not go back to work and have your bills paid because of commercial real estate. All right.
Yeah.
Let me check the time. Dave, Dan has a very good question. Uh, Dan is asking, Dave, how did you stay focused when all the chaos was trying to prevent you from success? How'd you stay focused?
Hey guys, I'm telling you, this is crucial. Okay. You've heard Peter talk about this. If he's watched any of his videos, it's about the why. Make sure you guys put that why in front of you everywhere. Some people, I was one of them, gets distracted really easy. And I'm telling you, I had post-it notes on my mirror, on my desk, in my truck as a reminder to stay focused. You guys can pick whatever words you want that keeps you dialed in, but keep that why in front of you and put comments below it, right? Don't let the
Yeah.
distractions get to you. Stay focused, right? Be coachable, okay? Stay in touch. If you guys get in this program, you'll see that. Stay in touch. We'll be here for you. Message, whatever those next steps are. Hey, coach told me to do this. I'm going to go to that. I'm going to do it and
Yeah.
then move on.
Very good. So Thomas is asking, where can I find a good detailed explanation on smart leverage? So Thomas, where you can do that, where you can find that is we interviewed Dave in his very first video of how he leveraged his
Mm.
HELOC, bought a property cash, refinanced it, raised their hands. It was like an arbitrage of leverage, smart leverage. And we'll put that link in the chat for you. Okay, Thomas? So Stephanie, could you do that for Thomas? Dave's original interview, how he pulled all this off. Okay. All right. Okay. All right. So, Dave, let me ask you this. I'm going to stop the share, right? So, Dave, if you could go back in time, right, and give one piece of advice to yourself, okay, to yourself, before you bought that very first deal, knowing all the fears you had back then, what would you say to yourself?
I would say find a mentor to help you get started on your journey. That's
Mm,
it.
mm,
That's it. Looking back, that was it. For me personally, that was a game changer. That was huge.
yeah.
That
And,
was that
and
was
now,
massive.
and now, Dave, you're the mentor.
Yeah.
Yeah.
So we're here.
Yeah, you're the
Let's
mentor.
go.
You're one of our most popular mentors in our company. Yeah,
Love to
because
help.
of
Hmm.
yeah, because of everything you've been through. All
Yep.
right. So Dave, you've gone from being a student now to being a coach in our mentoring program, guiding others through exactly what you've done. Share with me what is the number one mistake that you see your students making in this business, and how
Mm,
do you coach them?
yeah. 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 Good question. And and this is huge, guys. And one of the things I don't see is that or what I see is not gathering enough info about a specific deal. So, guys, don't invest blindly.
Mm,
Okay. Get that data because it's crucial. Okay. We're going to teach you that. Okay. What to do. Okay. You guys got to go out and get it, but we'll help you. Okay. And find out what that data that's missing. Okay. It happens a lot if you guys, look at deals, but we'll get you guys to reach out to those professionals that specialize and know what they're looking for. Okay. What you're
yeah.
going to be able to find. We'll tell you who you need to
Yeah,
call.
good answer, Dave. You know, Dave, you probably run into this too. For me, as a coach, the number one mistake I see them make is underestimating the expenses on a deal, right? So they'll get the data from the seller or from the
Yeah.
agent. We'll look at it and go, wait, these expenses are way too low, right? And then once we add what we believe are proper expenses because we own property, then it pretty much kills the deal,
Yeah.
right?
Yeah.
Or we
And
have to
then,
lower the price, right?
yeah. 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 And that's a great point, Peter. I just want to stress, guys, do not invest on hope. Do not do that because you don't play around with the numbers to make a bad deal good. Okay, because it's not going to work. Your goal is to be diligent and be persistent, like we talked about. You'll find a deal that pencils. I can tell you, I went through a ton of deals, a ton of deals that didn't pencil. And I was guilty at the beginning. Play, well, if we do this, coach, this is not going to work. It's not going to work. Don't create another risk. Okay. Get out of it right away. If it's a bad deal, move on.
Yep. Uh, Here's another good question. Uh, were you nervous when you contacted your first seller, right? And it was off market. And how many no's did you hear before you got to the first yes for an owner to agree to sell, right? I
Mm,
mean, that's probably a huge number, Dave. So take a wild guess what that was.
yeah,
We have it in our system, by the way.
yeah. Well, the beginning question is, yes, I was nervous. But again, you know what I did? All I did was glance at my why and it was game
Mm,
over. Okay.
mm,
You got to find something that's going to push you over the hump to take action. Don't let what we call false evidence appearing real, right? Fear. It'll paralyze you, but don't let it. Okay. That why needs to overpower that, whatever it is. Okay. Mine was freedom, getting time back. That was massive. Okay. It was that much to get over the fear. Yes, I was nervous, but I'm telling you guys, after the first couple phone calls, you know, you're still learning. You're always learning in real estate, but you get over that. Okay. Just like I use this analogy with my group all the time. Guys, when you get on a bike, you don't just hop on it and ride, right? It feels weird. You're
yep.
trying to get the seat position and everything. But what happens once you've done it a few times? You don't even think about it. You hop on the bike and you go. So that's why I was thinking, you know what? Okay, next call, next call, next call.
Yep.
And
Very
I
good,
just kept
Dave.
going, being
Um,
persistent.
Boma has a very good question. I'll answer this one. It says, what if someone doesn't have a HELOC like Dave did, right? So Boma,
Hmm.
here's the answer. You need to learn how to do creative financing, right?
Yep.
And find off-market deals with motivated sellers. Secondly, you can learn how to wholesale, commercial wholesaling, where
Hmm.
you just need to put the property under contract. That's what you need to
Yep.
do. And if it's a good deal, you can flip it to the buyer for money. We have many students doing that. And then thirdly, you can use private money. 2 weeks ago, we had a student buy a 6 unit with I think probably $800,000 in equity on day one, and he didn't use a dollar of his own money. So it's possible when you know these techniques. Okay. There's not a lot of those out there. You got to find them. It's hard work, right? But it's worth
Hmm.
it and it's life changing. Okay, Boma. So I hope that helped. Okay. All
Yeah,
right.
that's
Let
a
me
great
see.
point, Peter. I was
Mhm.
going to elaborate a little bit on that. Sometimes you can reach out to bridge lenders. You can call them, talk about a deal. If it's got potential, hey, they could finance up to 100% of it. You don't know,
Yep. Yep.
right? If the
Yep.
deal has potential.
Exactly.
Hmm.
Here's the last question, Dave. So, when you are coaching a new student who's stuck in the same 70-hour hamster wheel cycle that you were in, right? The grind, what is the very first step, right, that you have them take to break that cycle to get their first deal as a coach?
Yeah, yeah. I just tell them sit back. I'll ask them, do you have a consumer mindset or investor mindset? Where are you
Mm,
at? Okay. Where are you guys at? Because it's counterintuitive, right? You're being taught, as you know, by your mentor, Peter, get a job, right? Go to school, get a job, pay your taxes, retire, right? That's the system. So you got to think like a contrarian, right? And you got to say, hey, I want to have an investor mindset. So one of the first steps is try to break out of that. Okay. Get educated. Okay. We have a lot of stuff there, but, find out, right? Because as a consumer mindset, you might be worried about costs. Okay. Can I afford it? You start asking these things that play in, right? Because of the system, right? That causes fear. And you're just like, well, I want out or I can't do this. Okay. I'm telling you guys, if I can do this, you guys can do it. Okay. You had to shift my mindset. And this is one of the things I would challenge you guys, shift your mindset, focus on the benefits. Okay. Let that over with your why overpower that.
very
Hmm.
good. Very good. All right. Everyone, hopefully now you can see the benefits of coaching and what Dave did, right? So do me a favor, all right? Tell Dave thank you for his wisdom today. So go ahead and put in the chat. Thank Dave for his wisdom tonight. All right. There you go, Dave. There's lots of love there. All right.
Awesome.
And
Good to
uh,
hear, guys.
let me ask anyone out there, would you like to be mentored by Dave? Right? Is there anyone out there that's working a W-2, busting your behind? No, you don't see a future there, and you want to be coached by Dave, right? So we're going to give you that opportunity, right? To be coached by
Mhm.
Dave, by myself, by our other coaches. So we have what we call a done with you mentoring program where we work with you until you reach $500,000 of profits in your pocket, okay, in your pocket. And then we work with you and then you graduate from our program, right?
Mhm.
Dave is just about there, right? So, but Dave
Yep.
became a coach. He became a coach. So, is that how the program works, Dave? Did we support you enough to get you on that path to $500,000?
Big time. And that was the whole reason was because I knew I wasn't going to feel deserted. You guys were going to be
Mm,
there. I had
yes,
contact with messages, other resources there, but yeah, we're there. We'll be
yeah.
chatting with you. You guys get in, you know, you'll know when you can chat with me, with Peter and our other coaches.
Great. 5 days a week. So what I want to do
Yep.
here is I want to run this poll right here for everyone here listening. All right. And I'm going to launch this poll. Okay. Here's the poll, right? Who would like to learn more about being mentored by me and Dave or Bruce or Julia, our other coaches, right?
Mhm.
If you'd like to learn more about being mentored by us, go ahead and click yes. Okay. Or you can click yes, but I have questions. That's fine too. So go ahead and do that. So I see you putting your answers in the chat. Put your answers right on the poll for me, okay? So can you, Michael and Shimon and Leroy, can you put your answers right on the chat right there? Alice, right? Romaine, Philip, right? Philip, can you put in yes, but I have questions? Sherry, can you do the same? Montez, everything? Put the yes there, right on the poll so we can see. Hard to see in the chat and get a percentage. Okay. All right. Anthony, Sherry, Quantavius, go ahead. Right. JD, Alfonso, go ahead and put it right in right in the poll right here. If you like to learn more about getting mentored, right? Um, Today, we talked about getting off the hamster wheel. It is a process. Our whole company is designed to help you with that process. That's what we do, is help you with the process. And we've been doing it for 20 years. So we're good at it. And no person's situation is too big for us. So whether you make a little, you make a lot, you get hammered with taxes, you work 90 hours a week, it doesn't matter. If you're interested in learning how to get off of that hamster wheel, go ahead and click yes. All right. Okay. Thank you for that. All right. So I'm going to end the poll here. I have another poll I like to run, right? This is for someone, right, who's interested and wants to talk to someone tonight, right? So I have awesome people in the background waiting to talk to you tonight. So is there anyone out there, you are so fired up, you are so tired of your situation that you want to speak to someone tonight, okay? About our Done With You mentoring program. Not done for you, done with you. We hold your hand on financing, finding off-market deals, due diligence, finding investors, putting the deal together, all the entities. And we do one thing that no other company does, right? And that is we work with you after you close because we're with you. Our interests are mutually aligned. When you make money, we make money, and that's how we keep the doors open. Okay, that's how we're able to do what we do. All right, so if you're interested in speaking to someone tonight, go ahead and click now. All right, click now. All right, and then someone will get back to you right away. All right, go ahead and do that. Okay, so I want to do one other thing here is I want to share my screen. I want to share the screen with you. 1 second here. Oh, I need to end the poll first. 1 second here. All right, did the poll end? Okay, end the poll. Okay, I want to share this with you here. There's my screen here. All right. So on this poll here, on this screen here, it's going to share with you, right, how to schedule a call, right? So you can go to commercialpropertyadvisors.com/schedule. You come to this screen, click on your state, and you can go to California. Okay, again, commercialpropertyadvisors.com/schedule, and then put in your state, putting schedule my call. Very simple. You can also just call this number right here. We have an 800 number right here. Just call that number, right? Let's say you want to talk to someone tomorrow. That's the 24th. And you're going to talk to them at lunchtime. So click 12, then click next, put in your information, click schedule, and voila, you're all done. All right. And then that's it. All right. And then you'll be off and running. All right. Okay, so there you go. I saw someone that's speaking with, so Karma is speaking with Caleb on Thursday. Okay, great. Okay, all right, awesome. All right, okay. So any questions that you have on our mentoring program, you can go ahead and schedule a call, ask any questions you want, right? There's a link at the bottom of the screen that Stephanie put in. You can click on /schedule. Again, ask any questions that you want. All right. So everyone, thank you so much. Dave, I just want to say thank you so much for just sharing your wisdom. And you're an awesome coach. You're one of the most popular coaches we have. They love you. And the reason why is they can see themselves in you. And they want to get to where you are. Yep. All right.
Exactly right. Great being with you guys and looking to hear from you guys. So let's get at it. Let's take action. Let's
All
go.
right, awesome. All right, everyone, I'm going to segue into another video and I want you to watch, so just hold tight and the video will appear. Thanks, everyone, and I'll see you all next week. Watch this video.